Welcome to Fintalk, our second podcast in a series of podcasts brought to you by Alan Cuschieri and Moneybase. Today we will be discussing the markets, including ETFs, a follow-up on AI, and the new Healy bond issue. As an introduction, Alan Cuschieri has provided investment advice and wealth management since 1971 from our branches across Malta. Today, our clients also make use of our digital platforms that provide online trading and payment services. With Moneybase, either from mobile or from your web apps, you can send and receive bank payments, use a multi-currency MasterCard, trade over 40 markets including stocks, bonds, funds, ETFs, money market funds, and treasury bills. We are here to make money simple, and it is in this spirit that we have started this series of podcasts. Once again, I have Alex and Jordan, and I'd like to jump right in. Let's start with the Healy bond issue that was just oversubscribed in a couple of minutes, despite being a sizable issue of over 80 million, with a coupon of 5%, maturing in 2029. I wanted to get your thoughts on this.
Basically, Healy is a household name. It is one of the most solid names of the local market. It's reflected in its financials, which year on year has improved. It's reflected in the business diversification, the restaurants, the retail, technology, real estate, S-Log. It has a whole array which compensates for the fact that 40% of the business comes from its franchise in Romania. A criticism justified, I would say, was that there is a concentration. However, it is also a business that is very resilient in today's market. It is a household name. It's got good management, and this compensates for the fact that in spite of being an unsecured bond, still investors like the name, and the result was an overwhelming success. The issue was taken up, swallowed up, I would say, and that in itself proves that when there's a good company around, we as advisors recognize it, but also the public at large, the retail public at large, recognize it as well. I leave the technicals up to Joe.
Yes, no, as you've said, Alex, this is obviously one of the most solid names listed on the local stock exchange. Let's not forget that Healy is 1 billion shy away from its revenues. Okay, so in 2023, as I've said, revenues were just shy 1 billion. And we have seen a consistency in its increase in revenues over the past 3 years. In fact, if we had to look at revenues over the past 3 years, revenues have increased by 68%. If we had to look also at EBITDA, which is basically the earnings before interest, tax, depreciation and amortization, which is a very important metric that we also look at as credit holders. In this case, EBITDA has increased by 47% to 1 to 5 million. It's a first for a local company. And as you've said, the company has grew over the years into diversifying its business. And to be honest, I'm not surprised that obviously there was heavy demand for the issue. I think, to be fair, there was another factor, which was, let's say, a relatively quiet period for primary issues. Having said that, as we've pointed out, the company has grew its balance sheet over the years, and today we can say that we have seen not only a growth in revenue, but also a momentum in deleveraging the company's balance sheet. We are happy to see, obviously, these solid numbers for a local company as Healy Group.
So it's 125 million EBITDA?
Yeah, with consistent margins over the years. So it's not a one-off that we have seen, but we have seen the companies growing its EBITDA, but also having stable margins.
Interesting. All right. Are there any other bond options available locally at the moment or internationally for those?
Speaking locally, the latest public announcement was by Hallman Group. As a reminder, Hallman had issued a bond in 2014, which now it needs to refinance. So we will, in the coming days, have eventually a public announcement with the approval from the regulator for this new Hallman bond issue. If we had to look at the international markets, we've discussed this in our first podcasts. Following 15 years of hiatus, I think the bond market has again today, or let's say is offering us numerous opportunities, which we are happy obviously to take. Again, it is about looking at the company, being comfortable with the company's credit metrics, and obviously the importance of looking today's coupon, as we've discussed, as I've said in our first podcast, to obviously generate income rather than the expectations of capital appreciation from the bond market.
So, am I understanding correctly, Hallman has a rollover now?
Yes. So, as I've said, the bond that was issued in 2014 will be rollover with a lower nominal amount. So, existing holders will not eventually have the luxury of having the original location. Why? Because the company has opted to diversify more its capital structure by also using bank financing, which in my personal opinion is very positive for a company to have, having a diverse capital structure, being it of bond issues but also of bank financing. And this is where the company decided to lower its nominal issued amount.
Excellent. Okay, so moving on to the second quarter and discussing, obviously, moving on to the international markets. Last time we met, we were talking about the positive figures for the year. The markets continue to rise, except on Friday. The S&P still year to date is up 15%. Euro stocks up 7.6%. Nvidia year to date 155%. Microsoft 20%. In the European markets, SO 174%. And Bitcoin and Ethereum are up 50%. So I would say there's a clear dominance on AI, tech, and also the US markets. Because when comparing the US markets to the Euro markets, we're practically talking double the performance. What are your thoughts on this?
Yes, as you've said, the S&P has reached a new record high over the past days. This comes to no surprise. Why? Because, which eventually we'll discuss also throughout this podcast, there is a high concentration in selective stocks which continued to perform very well. You've mentioned Nvidia. Nvidia continues to perform well because also, in my opinion, there is what we call a herding effect. In investments, people basically are buying because they see other people buying. But realistically speaking, if we're to look at the expectations of AI generative revenues, okay, from today till 2032, we are looking at figures of around $1.3 trillion. And even from a capital expenditure point of view, that is, companies basically investing in AI, from the total pot of tech investments, AI by 2032 will be basically 12% of their capital expenditures. So despite that, we have seen, as I've said, a herding effect, in my opinion, in these selective stocks, being it Nvidia or any other names, okay, within the space. Realistically speaking, there is also obviously good forward-looking expectations on how this AI theme will continue to play out. And this comes obviously to no surprise that these very positive expectations are reflected in the stock prices of these selective names, which are key players within the space.
But do you think that Nvidia can retain its dominance in the sector? Do you think it can retain its dominance also and this kind of performance? Because a lot of people are asking, listen, I've missed the boat now.
I think one of the major advantages of Nvidia is that as many other businesses, it has the first mover advantage. So that always helps in obviously gaining momentum as opposed to your competitors. If you manage in a business to have high barriers to entry, that will obviously push back competition. So in relation to your question on the market performance of NVIDIA, as I've said earlier, I think there is some sort of herding effect, but fundamentally the company can still obviously generate the cash flows projected in the coming years. So it is a question because obviously we do expect eventually also some sort of pullbacks, and this is obviously very acceptable when stock prices move at these levels. To take the opportunity by starting to build a position.
Okay.
If I may interact on this as well, one of the concerns that investors have is that the appreciation in the stock market values has been narrow to a certain extent. And what's interesting about AI is what effect it's going to have on other sectors of the economy, which would then help a wider rally into the market. So we have AI in its application to, for example, the medical sector, in the travel sector. And all these sectors will eventually gain from the fact that they will have AI applications. And mentioning NVIDIA, it's, as we had mentioned in the first podcast, it's got a wide moat, which means it's got at least a 10-year advantage over its peers. And that would guarantee that in the foreseeable future, NVIDIA will do well, will do very well, actually.
Now, this weekend, in fact, it was revealed that Apple and Meta in discussions teaming up together to partner on AI. Obviously, to catch up with Microsoft, who are leading the race. We discussed Apple last time. What are your thoughts on this? Since then, there was Apple Intelligence launched. What are your thoughts on this?
This was, there was an article on last Sunday's Wall Street Journal where we have seen this news that you've mentioned. And that was obviously, to a certain extent, also a surprise. Why a surprise? Because let's not forget that Meta and Apple are not the best of buddies. As a reminder, in 2022, Apple has changed its privacy settings, which had cost Meta 10 billion of revenues. And again, despite that, this is still a rumor, okay? As I've said, this was an article published last Sunday. It is positive to see these companies getting into partnerships, as to be fair, Apple already did with through Chat GTP, to obviously continue to expand their reach through AI. To answer your question on Apple and the launch of Apple Intelligence, I think management recognized the fact that they were lagging in terms of performance when compared to Microsoft and other names, because we're not mentioning much Alphabet, but in reality, the stock price of Alphabet is up 30% on a year-to-date basis, and Alphabet has also made important investments within AI. So coming back to Apple, the management recognized the fact that the share price was lagging. They had to do something, but let's be fair with the company. I think Apple was one of the first companies which, in some shape or form, was utilizing AI through Siri. So it is not them not utilizing AI, but not utilizing the term artificial intelligence, which was, as we know, a hype throughout the past months. So the announcement of Apple Intelligence with a partnership, which, as I've said, with Chat GTP, I think it will help them eventually also improve their sales, especially Chat GPT. will also improve eventually their sales, their iPhone sales specifically going forward, because the new features obviously are very interesting. You can edit photos, you can basically, and I think this is one of the most important developments, have the most important notifications despite that your iPhone is on a do not disturb mode. Okay, so these are features which not only businesses and business executives are looking for, but also obviously individuals. So the news is a positive one, and there was a clear market reaction. In our first podcast, we've said, look, Apple's share price is lagging. On the news, the share price throughout the week was up 12%. So that's very positive, and I think we should continue to see the AI within also Apple evolving in the coming months.
In fact, Apple needed a catalyst, and we got a catalyst. It has also announced, even this morning I was watching the news, that it's going to try to strike a deal with Google as well. So the plan is very evident to me. I mean, looking at Apple, I mean, I was born when Apple did not exist. It has caused a revolution in my life, and has caused a revolution in everybody's life. So Apple always surprises on the upside. It lags behind for a while, comes up with a very innovative application, and that's it. It goes on again.
Typically, they're not first movers, but then when they do it better than anyone else. So it's interesting to see. Also, if I'm not mistaken, they were partnering with Meta to use OpenAI. And if I'm not mistaken, Microsoft has the right to 49% of the profits of OpenAI. So happy days for Microsoft as well. Okay, so let's move on from AI and maybe talk a bit about other sectors and how they performed in this quarter.
Yeah, if we were to look at, again, the S&P 500, and then we obviously can discuss also the European markets. We continue to see, as you've said in your introduction, a clear dominance by the tech industry. The tech sector was up 17% over the past month. But interestingly enough, and we've mentioned this in our first podcast also, how, and also Alex today mentioned it again, how AI is filtering down to other sectors. We continue to see a very strong performance in utilities. As I've said in our first podcast, utilities historically are considered as a defensive sector, but given the thirst of AI in generating this new team across applications, across data centers, across also medical healthcare, you've mentioned that earlier, Alex, also, we continue to see utilities perform very well. A company that comes to mind is Vistra Corp, which is up 1 to 2% on a year-to-date basis, and this comes to no surprise. Why? Because, as I've said, 50% of their revenues will actually be generated from AI, okay, because they need to power data centers, and the other 50% of their revenues or thereabouts will be generated through the improvements that the company will make in its provision of energy, interestingly enough, also through AI. So this is something that we're seeing, that AI is also improving not only core businesses of specific companies within the space, but also in other sectors, which usually use other avenues to try and improve their offerings. So utilities was another name, and we have seen also energy performing very well, and industrials. In Europe, we'll discuss later throughout this podcast, we've seen a retracement because of the MEP election results. However, we have seen, once again, financials doing well, and once again, technology also in Europe proving to be a very strong performer throughout the past month also.
But if you have to look at Europe and compare it to the US over the last 5 or 10 years,
no comparison.
No comparison.
There was only, for the first, let's say, for the past 20 to 30 years, there was only one quarter which I recall we started ourselves underperforming in our portfolios because we were overweight the US. This was the last quarter of 2022, okay, when the European market started outperforming strongly the US market. We started seeing that in the first 2 months also of 2023. Then we started again seeing a reversal of this. So to answer your question, as I've said, if we had to look at 20 years, 30 years, you can see a clear discrepancy in performances between the European market and the US market. Again, when compared to the US market, the European market is very small. For example, if we were to look at the tech sector.
So a better performance on the US markets historically.
Yes, for sure, definitely.
And I think still more flows going in there.
Yes, because we have more businesses there, we have more options, and this is where even us as portfolio managers, we try and select undervalued US names because the pool of European companies within different sectors is very, very limited. So we will have to select US companies, despite that our base currency is obviously euros.
I wouldn't want to spoil the party, but wouldn't it be an opportunity also for some select companies to play catch-up in this kind of environment? So if there is the MEP elections and there's uncertainty, then there's the French elections which came out of the blue, and it created a 3% movement, downward movement in the stock market. Good companies will remain good companies. So wouldn't you think that there will be opportunities, select opportunities, and that is where an advisor comes in and helps clients out to identify and have an entry level into those companies which makes sense then?
Yes, for sure. We had, as I've said, the retracement specifically in the French equity market. Again, we'll discuss throughout the podcast. But yes, to answer your question, there are a couple of companies which were literally slaughtered given the outcome of the MEP election results. And these companies are obviously, as you've said, cash flow generative companies, which were driven by the negative momentum within the equity market. So what we did, we took the opportunities. One that comes into mind today is Vinci. So Vinci is one of the European leaders within its space. We have seen a downward move from 110 to 97 levels. So we're talking about an intraday an intra-week move of around 13%. And this is where you start looking at these companies, seeing value and taking the opportunity to start building a position. I think the most important thing is that you take an allocation in a name that you're comfortable with, but not fully invest in the name at one go. So we start building a position. So if the price moves lower, you average. If the price continues to creep higher, you continue to build your position.
Okay, interesting. I just want to put in a quick question on EVs, because we didn't discuss it. I don't believe we discussed it last time. And recently there's been a lot of going on between the US, Europe and China. Everyone seems to be protecting his own turf. There was the launch of the Xiaomi car and so on. Tesla under pressure. Is there an update on that? What's your outlook on EVs?
I think this is a very dangerous issue, especially for the European market. So this kicked off by the US imposing tariffs on EV cars, on EV Chinese cars to be specific. Now there is pressure within the European community that Europe will also impose tariffs on, again, EV Chinese cars. There is, to no surprise, a big resistance from Germany. Why? Because we know that China is a very important market for German auto manufacturers, being it Volkswagen, being it Mercedes, being it BMW, and all the big names there. So I think we are playing in a very dangerous situation, because this will eventually get into a situation of a tit-for-tat issue. And again, we started already seeing China coming up with possibly also them imposing tariffs.
Yeah.
Hopefully Germany will manage to retain its resistance in convincing other European countries and the Commission per se not to impose any tariffs.
I agree with you personally. I'm staying away from EVs at the moment. I see it's too
So, yes.
volatile. There's a lot going on. And I think there was also a dip in demand versus the initial expectations. People are realizing maybe the practicality of it and so on and so forth. However, the EU is still pushing forward very aggressively with the targets for 2030
Yes.
for emissions, so it remains to be seen. Okay, let's move on now to ETFs. Following our last podcast, quite a few people asked us to talk about ETFs and how they can gain exposure to sectors through ETFs. So, can you give me some examples of the best performing ETFs in each sector?
Yes. When we favor a sector, inevitably we favor a sector and the major constituents of that sector. But an ETF is a very effective way of gaining access to that sector without being overly exposed to one single company. Just give you an example. One of my favorite ETFs is the iShares. iShares is BlackRock, S&P 500 healthcare. If you see the holdings that it has, it's got around 63 holdings. The major holding is Eli Lilly, who is in the news because of a successful FDA approval of one of the drugs. But it's got Johnson & Johnson, it's got Pfizer, it's got Amgen, it's got Merck's. So if you believe in the sector, the way forward, especially for smaller investors, is rather putting your eggs in one company and mentioning healthcare. There is also a danger that the approval of a certain drug which is in the pipeline won't happen, so there will be a reversal. But if it's an ETF and you've got 63 holdings, you are, in a way, protected, right? And this is predominant in ETFs for construction and materials, consumer discretion, basic resources, which is coming back to the fore, banks ETF. So in all of these ETFs, iShares is one of the most prolific issuers of ETF. It's got the strength of BlackRock behind it. It's not only that, there's Luxor, Amundi, all of these names have ETFs and sectorial ETFs. But the basic argument in favor of ETFs is that in a balanced portfolio, and especially in sectors which are specific, basic resources, right? You will still gain the advantage of a rise in that sector, but not take the biggest risk of having all your money in one single company.
Yeah. If I may add, the interesting fact about ETFs is they're very innovative. These companies we've mentioned, Luxor, we've mentioned iShares, Amundi, etc. They try always to come up with a new structuring in terms of teams, which is very, very also interesting. Coincidentally, lately we have seen a couple of these companies launching ETFs, which their underlying holdings are basically companies which have continued to increase their share buybacks over the years. So a couple of months ago, we have seen this new ETF, share buyback ETF, which, as I've said, is literally targeting companies which in 2023 have increased their share buybacks by 9.9%. We've mentioned share buybacks in our first podcast also when we've mentioned Apple. Apple increased their share buyback by 110 billion versus the expectations of 98 billion. And we are seeing these ETFs being structured with these different companies, again, for investors which want an exposure to these solid names. But most interestingly, as we know, when a company announces a share buyback, you should automatically see an increase in the stock price. And this is where obviously you will get your performance. Rather than getting a dividend, you will be getting a company which is doing share buybacks, but also triggering a share price increase through the composition of these holdings.
In fact, share buybacks is a very clear sign, because basically the company is saying, listen, our shares are too cheap, we'll take them on as treasury. And if that is not a clear sign to investors to follow suit, I don't know what is.
Yeah.
You know,
Yeah.
it's very intriguing. But what you've just mentioned, Jordan, that there is specific ETFs which target buybacks is something to consider.
Yes.
It's something to consider.
There are loads of ETFs, so obviously there's a lot of choice, but obviously also you need to know what to look out for.
Yes.
For example, the management fee is one thing.
Yes, it's very obviously an ETF is very cost efficient, because we're talking about a cost of between 0.18% to 0.3%. So that's very much on the low side.
Very
And
cost effective.
Yes, very cost effective. The important thing, as Alex pointed out, I think it is important to also look into the ETFs, because you have a couple of ETFs which are highly concentrated. So if we had to look at the World Technology ETF, I can tell you that it has 20% of its holding in Microsoft. So there you start getting uneasy with the composition of that underlying exposure to a specific name which has a high weighting within the ETF. So if something happens to Microsoft, being it a loss of business or any other deviation from the expectations that they have communicated to the market, you would eventually see a downward move in its stock price, which is very understandable. The problem is that if you would have been invested into this ETF, okay, you would obviously be affected by this downward move, given its 20% exposure in the company. So if you're not that in sync with these ETFs, and you want more obviously to have a more comprehensive view on these ETFs, because as you've said, there are many ETFs, it would be very good obviously to get a recommendation from investment professionals.
Or do your research before.
Yes.
Because sometimes even you see the same kind of target sector, but 3 different ones. So you need to know which is the best of the 3 by looking at the volume and all the other metrics that you've mentioned. Okay, so moving on, final question is basically about the outlook for Q3. And I'll leave it up to you to sort of give me a conclusion on where you see the market going, what your expectations are for Q3, and essentially towards the rest of the year.
Yeah. Basically, the outlook is positive. Obviously, there are going to be some headwinds in the form of elections, in the form of, and it's elections in the US, elections in Europe, the loose cannon of the Ukraine war and the possible complications that can come out. We mustn't lose sight of this. And from our experience, every time there is a rally of this size, there's always an excuse why it should go back for a while, which is healthy in a way. So the immediate outlook is not negative. I would say there is momentum. There's momentum, and when there's momentum, there's appreciation. But I have my reservations as to whether it can continue without first having a reversal, right? Nobody knows. But again, I've lived through 3 or 4 or 5 market crashes in my life, and when everything seems rosy and there's nothing stopping it, something happens. So we have to keep our feet on the ground. There are some wonderful opportunities out there. This is where you get help from advisors to show you around and try to mitigate the headwinds. All in all, if you're not a trader but an investor, you can take these opportunities to build up, as Jordan said, a portfolio of quality shares. Inevitably, some shares are core holdings. You just leave them there. Other shares are opportunistic situations. But on the whole, I am positive about the outlook, but cautious that during the course of the next quarters, there might be some headwinds which we have to face.
Obviously, I agree with you with the outlook. I am also cautiously optimistic. Having said that, we can't ignore obviously what is happening also from a political point of view in Europe. We have seen that these European election results were against and expectations, because we have seen again a momentum in far-right parties. And specifically, and this is my biggest concern, that we have seen an increase in support for far-right parties in Germany, which is the biggest European economy, but also in France, which is the second biggest economy. And it has been and getting more complicated in France, because after these elections, you've pointed out to this earlier, Alex, we have seen an immediate reaction by the announcement by Emmanuel Macron for a snap election. So we'll have elections. The first round will be on the 30th of June, the second will be on the 7th of July. These have triggered remarkable moves within equity markets. Specifically, the French market was 6% down on the week. French banks were down on average 10% to 11% on the week. So we can't ignore what is happening from a political point of view, but we must also recognize the fact that these moves also do create opportunities. And this is where, again, we start building an exposure in names that eventually, despite the volatility, we know that over the long term, will obviously generate total returns which are much more in line that we would have expected. So as I've said, cautiously optimistic. And again, in this political situation, not only in Europe but globally, I think today the focus is more on Europe and where we will get to. So looking at the US market, there is momentum. We have to be very mindful of the concentration risk we're seeing within the S&P 500. And this is something that we will have to be very mindful. But again, the economy in the US remains much more resilient than in Europe, and this is obviously a medium to long-term shot from an investment point of view.
Super. So I think with that we can close. I'm going to put in the usual proviso that obviously this is not investment advice. If you're not knowledgeable, speak to an advisor before investing. If you are knowledgeable, you can invest online. With Kalamata Cuschieri and Moneybase, you can actually do both. So you can have your advisory, you can do your discretionary, your online, your joint account all in one. You can use it to make payments and investments. So very proud of the fact that you can do everything over there. I really would like to thank everyone for sending us the feedback, such as the topics on ETFs and other topics we discussed. Please keep them coming, and we hope to have another podcast soon. Thank you.